Hi, welcome to forexstrategiesonline.com. In this video, I would like to show you how to use any forex trading strategy. That means how you can make any forex trading strategy work for you to make money in forex trading. There are many forex trading strategies available on the net, and there are a lot of good strategies are there, but still a lot of traders lose in forex trading. It is a known fact that uh, 95% of the traders lose in forex trading and only 5% of the traders win in forex trading. So in this video I would like to show you how you can how you can make any strategy work for you, or how you can use any forex trading strategy. So before going into that, let's see some of the basic forex trading strategies and how to use them. The following are some of the basic forex trading strategies. They are candlestick patterns, forex chart patterns, trend lines, support and resistance, 1 2 3 patterns. If you see candlestick patterns, there are again a lot of candlestick patterns are there. Some of them are dojis, engulfing, haramis, morning star, and evening star. Many traders use these candlestick patterns because, they represent, sometimes they represent some reversal patterns, and sometimes they represent some continuous patterns. Let's see one of the example, one of the candlestick patterns, doji. A doji has normally same opening and closing price. See in this chart you can see that a doji is formed here. This has same opening and closing price, and if you see here, the trend is in the upward direction, and then a doji formed and the trend reversed. So this is one of the candlestick pattern. And the next one is forex chart patterns. Again, there are a lot of forex chart patterns, and some of them are head and shoulders, double tops, double bottoms, rectangles, and channels. So these are some of the forex chart patterns. And let's see the example for head and shoulders. If you see this example, this is an head and shoulders pattern. If you see, this is the head here, and these are the shoulders, and this is the neckline. Once the price broke the neckline, it went in the same direction for some time. So this is an example of a head and shoulder pattern. The next one is trend lines. Normally traders draw trend lines on the charts, and when the trend lines are broken, they enter trading. One of the example is, this is an example. If you see, I have drawn a trend line here, and the price broke the trend line and it went in the same direction, and is going in the same direction. Next one is support and resistance. Normally traders draw support and resistance lines, and when these are broken, they enter the trading in the same direction. This is an example of a support and resistance line. See, this is the resistance line and this is the support line here, and the resistance line is broken in the upward direction, and the price went for some time in the same direction. And the next one is 1 2 3 pattern. Normally when a trend is going in some direction, let's say it is going in the downward direction, and a reversal happens, and then again it followed the same downward direction, but the second low didn't cross the first previous low. This is an example here. See, the trend is going in the downward direction, and it reversed, and then it started going in the same downward direction, but it didn't cross the previous low, which is the first low. This is the first low, this is the second low, and this is the first point, this is the second point, this is the third point. That's why this is called 1 2 3 pattern. And this is the neckline here, and the price broke the neckline at this point, and the price went in this direction. So this is 1 2 3 pattern. So like this, there are many strategies out there, but again, most of the traders fail in forex trading. So how to use any strategy? What are the rules that you have to follow for making any strategy work for you? These are some of the rules, and the some they are some of the rules, but they are very important rules. First one is money management. Second one is you have to count only the pips but not the money. And third one is practice. You have to practice the strategy a lot. Let's see about the first one, which is the money management. If you see the so what is money management? First, money management is nothing but knowing how much amount you can risk in forex trading. The general rule for money management is you have to always invest 2% of the amount that you have in your account. That means, let's say you have $1,000 in your forex in your account, and 2% is nothing but $20. That means you have to trade with $20. That is the money management rule. And if you have $5,000 in your account, 2% is nothing but $100. That means you have to trade with only $100. So this is the general money management rule that most of the traders follow. What are the advantages? Let's see the advantages of following this money management. Let's say you followed this money management rule and you entered the trade with 2% of the money you have in your account. That means, let's say you have $5,000 in your account and you entered the trade with $100. So, and let's say the trade is not going in your favorite direction but it's going in a negative direction. Even though the trade is going in the negative direction, you can still wait for the trade to come in your favorite direction. That means here you don't really need to use any stop losses. Sorry. So here you don't really need to use any stop losses at this point. You can still wait for the trade because you are out of $5,000 you are trading with only 2%, which is $100. So you can really wait for this trade, to for it, to come in your favorite direction. So the first one is, the first advantage is you don't need to use any stop loss, and you don't have to worry that your trades will hit the stop loss and you lose the money. So let me show you an example at this point. Okay, let's see this one. At this point, let's say you are trading with, you have $5,000 in your account. You entered a long trade at this point with, let's say, one or two lots. So that means you are trading with 100, not 100, but $1,000 to $2,000 at a time, and the trade started reversing at this point. That means it came in this direction. It is it is just testing this trend line at this point. And somewhere at this point you might think that because you are using a lot of money for your trade, you might think that the trade is going to lose your whole amount because you're trading with $1,000 or $2,000. So you may close the trade at this point, somewhere at this point, and you lose some of your money. But if you trade with only 2% of the amount, which is $100, you can still wait here. And you can also open another long trade at this point, where it is testing this trend line. You can open another long trade, and then you will eventually see profits for your both of the trades. So that is the main advantage of following money management in forex trading. And next one is you can open many trades at a time. That means, if you invest only 2% of the money, you can open 10 trades, 15 trades at a time. That means, let's say, you open 10 trades at a time. That means, at least some of the trades might close in profits, and some trades, let's say, they're going in a negative direction, they're not going in your favorite direction. But what are the profits that you have already made with some of those trades? They will cover the negative, the present losses that you have on some of the trades. That means you really close the trades that are already in losses, because they will again come in your favorite direction and they close in profits eventually. So this is another advantage. You can open many trades at a time. So this is all about money management. And second one is you have to always count the pips but not the money. Since if you follow the money management rule, 2% money management rule, you will be trading with very small amount, and you might think that you are making like only small amounts of money. So don't count the money, but always count the pips, because in the end, if you check your balance, definitely you will be making very good amount of money. So you have to always count the number of pips, but not the money. And the third one is practicing the strategy. It is really important, because any strategy you find, first thing is you have to practice it a lot. There are a lot of forex brokers who offer demo trading accounts. So go ahead and open a demo trading account with any with any forex broker, and practice the forex strategy first. Once you practice the forex strategy, then you will know whether the strategy works for you or not. Because the strategy is working for another trader, it doesn't mean that it works for you also, because the other trader might have practiced the strategy a lot, and he or she really knows when the strategy works and when it won't work. So to know that one, you have to practice the strategy a lot first. Once you feel comfort with the strategy, then you go for a live trading with the strategy. So these three are the main important things for if you want to use any strategy in forex trading. See, this is an example of since I am following all the above rules, this is what I am getting in that. See, uh, I am following the money management rule of 2%, so I am trading with only point 0.2 lots or point 0.1 lot. And some of the trades you can see, this is the opening time and this is the closing time, and some of the trades you can see that I waited for more than a month to close the trades. But since I am following the money management rules, that's the reason I waited for those trades to come in my favorite direction and close in profit. So if you follow all these above rules, which is money management, counting the pips but not the money, and practice the strategy, you can really work with any strategy in forex trading, and you can make money in forex trading. So thank you very much for viewing this video. If you are interested in any forex trading strategies, please visit my site at forex-strategies-online.com. You can find a lot of forex strategies here, and some of the forex strategies also use some custom indicators, but you can download those custom indicators and also the template that is used for that particular strategy for free on my site. So once again, thank you very much. Bye.